And we should point out the market has pretty much made it clear what it thinks about what's going on. The secondary market for some of the shortest of short-term bills out there, paying out at 7%. Liz Capo McCormick joining us right now. She's Bloomberg's chief correspondent for global macro markets. And as we focus on some of the moves in the shortest of short-term bills, Liz, you had a story out on the Bloomberg terminal today talking about the potential disruptions to auctions of some of those longer-term issues and whether, I guess, now we have something new that we need to be worried about.
Right, exactly, Romaine, because in past episodes, last one, 2015, if push gets to shove, right now we're in a window where they don't have any notes and bonds maturing they have to worry about, but they have, in these quagmires of the debt limit, had to delay auctions of longer-term debt, like you're saying. And, you know, people are always trying to look forward, and we're looking, there's a good round of note and bond auctions that will settle June 15th. So if somehow they get past this June 1 date that Janet Yellen said may be kind of the quote-unquote X date, but they get a little more headroom, and it gets to the point where they announce these auctions in early June, like the 8th, that if they fear, like, oh, we may not be able to settle them on the 15th, long story short, they could have a delay. So, I mean, it's not, you know, top of mind right now for everyone because we're dealing with this, you know, the bills that they're going to announce tomorrow. But, yeah, it's happened. I mean, this whole quagmire has gummed up so many things before, and like, you know, we've written about and you've talked about it, ultimately costs money. When Treasury has bills at 7%, I mean, those are in the secondary market, but they've been selling them at high yields. That costs money too, right?
Well, Liz, this is coming in the background of Treasury liquidity getting even thinner and thinner over the last few weeks, months. How much of a difference will that delayed auction actually make in the background of already fairly thin liquidity?
Well, that's the thing, Preeti. Like anything, this is always on a razor's edge, liquidity in the Treasury market. So, I mean, Treasury always does a good job. They would announce it days in advance and say, we're going to delay this, but it doesn't help. And like I think Kayleigh was talking, or your other guest from BNY Mellon was talking about, like, technical default or not. If they, you know, were to do something like, oh my gosh, they're at the wire, which Janet Yellen said she doesn't want to do, but they prioritize and make sure they pay interest and, you know, on treasuries, you know, that's not great. And then if there was a delayed payment on treasuries, people have talked about, even if things kind of work as a backdoor plans have, that can't help liquidity. So there's just so many risks to the marketplace.
So real quickly, I do want to go back to some of the short-term issues. We saw an interesting sale a little bit earlier today, longer term, that appeared to have pretty decent demand. We're supposed to get another funding announcement tomorrow for 3 month. What is that? Is that 3 month and 6 month? Remind me if I'm correctly here.
Yes,
is there any chance that that announcement is not going to happen?
Well, that's what everyone's looking at. Luke Randall, who everybody follows, including me, at Wrightson, you know, he talked about that's going to be really a focal point to see if they feel comfortable announcing, because they settle next week, which I'm losing track of which day of the week next week is June 1, but it's close, right? You know, so that's going to be focused. Do they get those bill announcements off as planned? We're not sure. So we're going to all be watching tomorrow. So there's just so many things in play.